Hello everyone, welcome back to the Road to Glory on Minority Trades. This is Lalo here. So on this episode, we're gonna review the trades for the rest of the month of January. I decided to do it like that because they're very quick trades, and because I've also fallen behind um, on being consistent with recording them at the end of the week. Mainly because I realized that I was focusing more on how to make and edit the videos than I was on my studying. So um, we're just gonna do it like this for now. So January was supposed to be a good month for me. So as of now, which is January 13, my account was sitting at $442. I was up 133, and I had a 50% winning average. Yeah, because I had took 4 trades, I won 2 and I lost 2. And January I thought was gonna be a good month because that's the month that I had my first home run hit on CTIB. If you guys remember from the last episode, I won my biggest profit of my so far in my small account challenge, which was 154, and then from there I lost on 2, which was $22 on BIOC and then $40 on TRIL. So what I'm thinking right now is to just try and keep focusing on the best quality setups and keep my losses small. But unfortunately, it didn't end up being as good as I thought it was. We'll review the stats on how I ended the month after, but just to let you guys know, I didn't end up growing my account, which I thought I was gonna do this month. Let's go ahead and review the first trade. January 14th, 2020, TEUM $16 profit. I'm gonna have to show you guys on the 5-minute chart because for some reason on Think or Swim I can't go back more than 30 days with a 1-minute time frame, but 5 minutes is okay. So on TEUM, I was looking for a high day break. On TEUM, I wasn't there for the open, but I did play the afternoon. Now, when I logged on, I saw that I had already tested this breakout level, which was 79 cents. I always look at the daily chart just because you want to see what's doing, and you want to be there when it breaks technical levels like this breakout. 78 cents. So I saw that I had tested this level right here in the morning, tested it twice, and then came back down, and it was climbing up. I liked how it was forming higher lows after reclaiming the VWAP. I should have probably took an entry on one of these little dips instead of buying right at the breakout, because when you buy before the breakout, you can still try and get out for profit if the breakout fails. But anyways, I'm still learning, so I bought 500 shares at the price of 83 cents, which was on this pullback right here. I actually threw in an order when it crossed over the 78, or when it hit 78. I threw in 500 shares, but only 22 shares got filled. And instead of chasing it on this little spike, I waited for it to come back down. I knew I was gonna have a pullback, so you can see that it spiked up to 86, and then it came back down, had a pullback, and this is where I bought 500 the remainder of my shares, which was like 480. I filled in the rest at 83 cents, and then I think I got out right here at 86. I didn't even get out at 88. I thought this thing was gonna keep running, and I didn't like how it topped right here and then had this hard pullback. So I think I got out right at the bounce. I didn't wait for it to break out. I got too scared. I should have seen the good side on it, which was it formed a higher low. I should have just kept my initial risk, which was the bottom of this candle right here, 81 cents. If I would have just stuck to my risk and just look for it to break out right here, I would have made some good profit on it. But yeah, I got 3 cents out of it. It's a little scalp with 500 shares. That's $16 profit. So let's go with the next trade. Next trade was a loss. January 16, 2020 on NK. Alright, so this is NK. Again, I wasn't able to trade the morning on this one. Most of the times I don't get to trade the morning because I come out of work late the day before, and I don't wake up on time. But that's something that I'm still working on. I like to trade the open, actually. I need to figure something out. I'll probably just end up staying up until the market opens and then going to sleep after. I don't know, I'll figure it out. But NK NK is one that I'm okay with losing because it's a new pattern that I'm trying to practice, which is an afternoon squeeze. For days like this that I'm not able to trade the open, I can trade into the close. But this one was a stock that I saw that came down from its highs. Looked like it was bouncing because it was forming higher lows, and then once I saw it form this higher low, I saw it break through the VWAP, which is why I decided to take my entry right there. And I was risking off of this level right here, which was this low right here. I was risking off of this, which is why I took a pretty big loss. I played with 50 shares at 829. Yeah, on the break of the VWAP. Wow, I didn't even realize I took a horrible entry. 829. That's almost at the top of this candle. I should have just waited for the pullback and then wait to see if it holds at VWAP, or even bought on this low before it broke the VWAP, so that way if it fails, I can at least try to get out with a small profit. I could have probably took a position at 770, 780-ish. That right there is already a 40-50 cent profit. That would have been a very solid base hit. About $25 instead of a $29 loss. So yeah, that's my biggest mistake right now is picking the right entries. Picking the right entries and being patient. But yeah, picking the right entries. Important lesson. Next trade is a $47 profit on NTRP on January 22, 2020. I bought I bought the pre-market breakout right here. NTRP, this is one where, of course, I was able to trade the open, and this is why I like to trade the open, because you see the most volatility in the open. But a lot of people see that as dangerous because it's too much volatility. But with the right strategy, I feel like you can profit off of it, and maybe even get a real good entry for those that tend to keep running for 2-3 days. Um, but yeah, this was a low float, 9 million float, and on that morning, it had news saying NTRP provides corporate update after completing data analysis for advanced Alzheimer's disease trial. So anytime you see stock come out with trial-related news, those are pretty good hot topics right there. Usually when it says like, oh, they completed phase 2 or something like that, then you'll see those run. But yeah, pre-market breakouts pretty simple. Just buy the break of the pre-market high. That's it. You can if you want, you could try to get a better entry than at the breakout, so that way if it fails, you can still get out with profit. That's a pretty good strategy that I'm learning right now, which is why you're gonna hear me say it a lot. Try to anticipate the moves. You can try to either go in with half position before it breaks and then add at the break, instead of just adding your full position at the break, because most of the time they can fail. You never know which ones are going to fail. But yeah, so I got in with 100 shares at 260, which was when it broke. And let me see, I saw that it was not up that much pre-market and it was already pulling back. It started spiking at the open, so I was looking for it to break the pre-market high. Its next level of resistance was the 200 EMA, which was 297. It kind of hesitated to cross it, so I sold as soon as it did and reached 306. I could have got a better entry, but I am okay with my small profit because I know that I was right. I was not sure on how many shares I could have bought, so I just jumped in. That's pretty good, but let's see. I want to look at By the way, that's what I wrote in my trading journal. I want to see what it looked like on the 1 minute. Yeah, I could have anticipated it, but I think I played it pretty well. I shouldn't have sold right at the 200 EMA. Let me show you guys the 200 EMA. Let's see if it pops up. Because again, this is like 2 months after the trade that I'm recording. But yeah, either look at the 200 EMA. That's exactly where I sold at the 200 EMA. That gold line is a 200 moving average, 200-day moving average, and that's exactly where I sold. I should have just held through here, sell half of my position, and then keep my move my risk to my entry price. It never reaches my entry price. I would have continued to hold and sell the rest at 350-ish. But all in all, that was a pretty good trade. Again, that was 100 shares, in at 260, out at 306. That's 46 cents in profit. And I'm playing with small shares, just 100. But I mean, what's gonna happen when I can buy 1,000 shares. That's $470 profit in 10-15 minutes. That's not bad. That's not bad at all. And what would it take to buy 1,000 shares? I entered at $2.60 times 1,000. That's 2,600. That's not bad, 470 in 15 minutes. Most of you make 470 in a week. And moving on with my next trade, which was a second time on NTRP, the same day, minus $10, because I played it with, the second time I played it with 50 shares. Where did I buy? At 6:51 a.m. What was my entry? My entry was 339. Oh, I tried to buy the break, the high day break. So first I played the pre-market breakout. I saw it pull back, and I fell for FOMO. I was, fear of missing out, because I knew that I did wrong in selling my whole position. When I saw it climb back up, I was like, God, I wish I still had 50. And then that's where I bought 50 shares when it broke. But I got a horrible entry. I got filled right at the top. No, not right at the top. 339. I got filled at 339. It started to come back down, and I got out at 315. And I played it so dumb. I should have still held for 2 more minutes, 2-3 more minutes. I would have held. I would have felt a little safer and got out at least 10 cents higher. But hope holding hope is not a strategy. What I really should be telling myself is I should have just not even took the trade. Just be happy with my base hit and move on to the next trade. Leave it alone, because I was just chasing at this point. I didn't want it to keep running without. I didn't want it to keep on running without me. So I chased it, and I got burned for that. So I lost $10 on that one. So that day I ended the day with a $37 profit on that day. Next trade is January 24, 2020. $13 loss on TNXP. Sometimes on these really low price stocks, I'll remove the 200 moving average, because you can see the chart a little better. But let's move to the 24. This red candle. What was mine? I'm gonna read my notes. I was interested during pre-market because I saw that it was a low float. Its float was 1.5 million. It had news, and it was not up that much. Its news read that it announces successful completion of a Fed fasting and dose proportionality study. I saw it set itself up nicely for a high day break, but I knew that I should have waited for it to break the pre-market high, because most of the high day breaks fail if they are trading under the pre-market high. Another red flag was the daily chart. It has a history of gapping up and dumping. Let's see if that's true. It kinda is true. You see it right here. Gaps up, fails, gaps up and spikes, and then it fails. Yup, look at that, gap up and fail. Gap up and fail. Look at this, gap up, fail, gap up, fail, gap up, fail, gap up, fail. got too emotional, wanted to hit a home run, which is why I did not wait for it to break the pre-market high. I wanted to jump in early and maximize my profit. Once I was in, I knew something was wrong because it did not break the high of day convincingly. So I called out. So I scaled out so that I can minimize my risk. I cut losses quick. So I got in right here. I think I got in this one late. I got in it after it broke the pre-market high. Yeah, so let me show you guys the daily, the 1 minute chart on it. This is a 1 minute chart on the right side, and you can see that I got in after it looked like it was already getting too. You can see I got in it after it had already ran a little bit. I should have got in it again before the high of day break, just so that I can have a better entry in case that this would happen, which was fail. So you can see right here, fail, spiked up a little bit, failed, and it just sold off the rest of the day, which is why you don't always want to hold and hold. Look at this, you would have took a bad loss, you would have just hold. I got in with 200 shares at 195, and I got out at 192 and 184. So I saw that it was failing, took out 100 shares in this big crack below the VWAP. I sold the rest of my shares, and that was it, accepted the loss. But next time, I'm gonna take into consideration what I see from the daily chart. I wouldn't get in it at all in any stock that I see like that gaps or fails. It would really have to prove itself. Like if this would have broken the market high, that would have been a strong bullish factor right there. That would have been a good reason to hold. But yeah, let the daily chart say the story. Let's go to the next trade. MGEN, $4 loss on that same day. That's bad. Already, without looking at the trade, I can already see that I was revenge trading. Now on my journal in the last trade before this one, I said it clearly. I'm looking for a home run. Why? Because I'm getting chopped away with these losses. My profit, my home run profit, which was at the beginning of the month, is getting chopped down little by little with these losses. Why? Because I'm looking for another big winner like that, which is the wrong mentality. Just let the trades come to you and stick to your strategy. Don't just start running into things that are running. Don't just start jumping into things that are running. Let's pull up the chart for MGen. This is a revenge trade right here. Just because I took a loss, I didn't want to take a loss. I saw another stock that was better and jumped into it randomly when it was running, and then stopped out for a loss. I bet that's what happened. MGen, oh yes, MGen was a runner, ran for like 3 or 4 days. You can see it right here. Ran for like 3 days. But oh, look at this beautiful high of day break right here. That's why I jumped in it. I took the loss on TNXP. I saw MGen was halted. And I looked at it and I was like, God, look at that high day break setup right there. This is a beautiful high day break setup. It reaches the high of 83 right here, pulls back for a couple minutes. This is 10 minutes right here, 5 and 5, 10 minutes, and then rips through the high day break. this would have been a good entry, even if for someone like me that I always buy at the break at 83 cents. Let's say you got filled between 80 and 90 cents. You could buy, with my account, you could have bought 400 shares. If I would have never took that stupid trade on TNXP, I could have bought 400 shares right here. Let's say I would have got filled at 90 shares. Let's say I would have got filled at 90 cents. You go into the holds, which holds is at 110. So if you're in with 400 shares from 90 to 110, that's 20 cents per share profit. You're up. What? My math is horrible. You're up what, like 80 bucks? Let's see, 400 times 120. Yes, you're up 80 bucks into the hole. Let's say it resumes from the hole at 125, and you get out on the spike at 130. Right there, you already made 40 cents profit on each share. So 400 times 0.40, $160 profit in what, like 20 minutes with 400 shares, a small account. And that's what got to me on this one, that I missed it, that I was looking at the wrong one and I missed it. This is why you let the trades come to you. You don't just rush into them. Just be on the lookout and trade like a sniper. But yeah, this one I saw it when it was already halted. I resumed from the halt, and I bought at 133. I bought as soon as it resumed from the halt, started spiking. I thought it was just gonna keep running. I bought at 133, 50 shares, slammed down, and I got out on a small little bounce at 124, and then the next candle it went higher to 144. So I could have played it a lot better if I would have switched for this bounce, and then sell at the little spike. But or just don't take the trade. Don't take the revenge trade. Just accept that you took a loss and that you missed out on this one, and don't chase. Like, you see, I'm getting burned because I'm chasing. But that was it for this day. Let's move on with the next trade. Lee, on 1/29/2020, I took a $26 loss on Lee. Saw that it ran. It had news that it was acquiring Warren Buffett's newspaper operations. It spiked past the pre-market high, came down right here and around this area. At 296, I decided to buy, which was on the 1 minute. You see it. It had a pullback and it had a green candle, and I bought right there because, again, I'm trying not to buy at the exact breakout levels, so I wanted to choose the entry lower, and it ended up just selling off. I ended up just getting out at $2.70. I think I had set my risk at the VWAP, so I sold right here as soon as it broke VWAP. Took a $26 loss. So let's move on with the next trade. HENC on that same day, a $16 loss. This is the OTC stock. Look, I took that loss on this day right here. Because I thought that it was gonna break out. It did actually break out, but If you look at the hourly, I took that loss on 129 when it was pulling back. Where is it at? 129, right here. I tried to buy it into the close, and I wanted to see a gap up the next day because it looked like it was having a breakout, a failed breakout, and it was closing near the breakout level, and I thought it was gonna gap up the next day. I had bought 4,000 shares at 0.035. I was just wrong at the time. I should have waited for it to bottom out and then see it ramp up again. But look how clean it looks on the hourly chart. You can see these little pullbacks, and then when they hold at the previous resistance level, look at this previous resistance was 0.0338, and it held at 0.0338 as well. It just started. From 0.03 to 0.2.3, 36 cents. That right there, how much is that? Let's see if I do the math right. That's 1,200% that it went up in, I don't know, what, like 5-6 days. But yeah, this was just a revenge trade. I admit to my revenge trades. You can see I even wrote it down right there. It's a revenge trade. Revenge trade instead of revenge trade. I messed up on that one. I didn't even have a good strategy. Let's move on with the next trade. VXRT. Another loss on January 31, 2020. That's horrible. You see that I'm on a losing streak right now. Right now I've lost 1, 2, 3, 4, 5, 6 with this one. 6 losses in a row. Wow. I started off so good. So good. And then I just gave it all back, pretty much. So this was what was my trade? I was trying to play the pre-market breakout. I was buying it from here when it was breaking the 108 level. I bought 200 shares at 110, and for a quick second I was actually up 4 cents. I was up 4 cents, which is not anything to celebrate, and it ended up just coming back down and then squeezed back up to 119, 120, and it just, I don't like the way that this was traded. It was no pattern for me right here. There was no pattern for me to play off of, and I mean I'm going out of my patterns that I have set for myself, which is the high of day break and the red to green move. But let's go ahead and move on with the next trade. And the last trade of the month on the same day on ITCC. If things couldn't just get any worse, look at that, a $55 loss. But I mean, what I can say from this, there's when I was trading in January, I was trading from my laptop on my truck. I'm a truck driver, so when I'm not home, I'll take my laptop and I'll trade from the truck, or I'll be trading on my phone sometimes. And I realized now that I took these nasty losses because I wasn't at home in my where you're focused only on the market. Because look at this, I took a 7 losing streak because I was trying to just make money, just gambling like a degenerate instead of just focusing on my pattern and focusing on the art of trading. So on ITCC, the only thing I can say is that I looked at it because it was such a low price, and I had about half of my capital to trade because I had took a loss on a BXRT. So I looked at a lower price one that I can buy big shares and look for a quick move and make some money so that I can, stop the wound from bleeding, stop the losing streak. But I made it even worse and made the cut even bigger. I bought when it came to the VWAP. I thought it was gonna hold VWAP and then retest the high and break to 20 cents maybe. So I bought 1,000 shares at 14 cents. And look at this. You can see it just cracked down to 6. But luckily for me, I kept my risk and got out at 9 cents. But either way, I made the cut even bigger than what it was. So I ended the month with a $6 loss, and that was because I traded some OTC stocks, and with these, they actually do charge commission fees, which was $5 and some change per trade. So every time you buy, you get charged $5, and every time you sell, you get charged another $5. And that's only for OTC stocks on Thinkorswim. And yeah, I ended up with a $6 loss, and my account balance at the end of January was $302.53, the lowest that it's been. So January was a bittersweet month because I had my biggest profit in that month, and I also managed to get my account at its lowest that it's ever been. But we're learning, and little by little, I do think that I'm going to get better day by day. I just gotta listen to my rules and follow them. So that's it for this episode.